Welcome back to Consumer Says, a podcast done by Morning Consult Economic Intelligence. I'm happy to be joined here in the new year in 2025 with my co host Kayla. Hi, Kayla.
Hi, Sophia. I'm so excited to be back on the podcast with you.
Thank you. Me too. I hope you had a nice holiday break. I'm excited to get back into it. There's a lot going on already. Um, so there's just a lot to dig into already in this new year, especially with the labor market, which is going to be what we're going to talk about first. But just to give an overview of this week's episode, we are going to talk about the labor market briefly, but then we're going to go into our index of consumer sentiment. This time, we've talked about a little bit in past episodes, and this time we're going to talk about a little bit briefly more US consumer sentiment, but also internationally. Because for those of you who don't know, we don't only just collect our daily consumer sentiment data in the US, we also do it in 40 plus countries. So that's super interesting. We can compare it across the whole globe, a lot of the big players in the global market. So we'll get into that, and we're going to have a special guest, actually, the head of economic analysis. And then one more thing before we get into our temperature check. Just as a reminder for those of you who are new or maybe didn't know this, we actually have a corresponding newsletter that can be sent to your inbox every time we put out a new episode. And so if you prefer to read or if you want to see some of the links or charts in a newsletter format that we're referencing today in our podcast, please sign up for that because it's full of great information, and sometimes it's great to read instead of listen or have it as a complementary tool. So, lots of news came out today at the time of the recording about the labor market, but we've also just gotten a lot of labor market data throughout the week. So I thought it would be prudent to talk about temperature check with the labor market because in 2025, I do think the labor market is going to determine a lot of the path of the not just the economy but of interest rates, and so it's something that not just us but markets and everybody is watching closely these numbers to see how it might affect the Fed and how it might affect the potential of a soft landing. So where are we today with the U.S. labor market? I know there's layers to it, so one simple temperature might be difficult, but let's try to summarize it. And where are we at today?
I'm going to lead off with a simple temperature. And it's not necessarily simple how I got there, but I would say the labor market is 68 degrees. And as a reminder, or if this is your first time on the podcast, Sophia and I generally have 70 degrees as sort of the goal for all these temperature checks. It's a temperature we like. So 68 degrees is just barely on the cool side. And there are a lot of mixed signals in the labor market. We have talked about this before, but the reason I would say 68 degrees, which is like, really pretty close to that ideal, just a touch on the cool side, is really the stability we're seeing in the unemployment rate. Like most people who want a job have a job. The reason it's on the cool side instead of the warm side is because it is taking longer to find those jobs for people who are out there looking. And we see that in rising continued claims data, lower job openings, things like that. Just anecdotally, consumers also feel very negative if they're job searching. They don't feel so great about the opportunities out there. But um, unemployment actually went down month over month according to the latest data. And in our own index that we have at a higher frequency going through the beginning of January, we've continued to see consumers reporting lower unemployment, even below what we saw through December in the Bureau of Labor Statistics report.
Mhm. Yeah, so the unemployment rate ticked down in December to 4.1%. For those who are unfamiliar with our unemployment index, it's daily. And so we can kind of get a preview of the directionality of the unemployment rate that BLS puts out because our unemployment index has been going down for a while now. But
Yeah.
then I think of it as a two-pronged labor market with one prong being a lot bigger. So because unemployment's so low, that means most people have a job, most people are employed, and those people are pretty safe in their jobs as of now. and they're doing pretty well. But then if you are one of the unlucky few who happen to be let go or in between jobs, it's a lot more difficult than it was last year or the year before to find a new job, as you mentioned. But that being said, overall pretty good. At the same time, inflation has come down a lot from its highs. We have seen it tick up a little bit. For CPI, it was at its lowest at 2.4% earlier a few months ago, but in recent months it was ticked up to 2.7%, which is rounding up to 3, which isn't a great news for the Fed. But overall, I would say consumers are in a better spot than they were, when inflation was soaring and things seem to be settling down a bit. And it seems like they're noticing with how our index of consumer sentiment has recovered since the peak of inflation. Kayla, how has the index of consumer sentiment evolved since Morning Consult started tracking it pre-pandemic, and where are we heading with that?
Yeah, so I do think it's useful to look back because consumer sentiment is actually doing something kind of interesting right now. Just this past week, it's actually kind of gotten back to about as high as it's been since before the pandemic. There's this long-standing story among those who follow consumer sentiment about, or sort of a mystery about why has consumer sentiment never returned to its pre-pandemic level at the top line. And it still hasn't. We're still not all the way back to like 2019 levels, 2018 levels, which is when Morning Consult started tracking. But since that time, we did have initially some pretty strong recovery, peaking in kind of mid 2021. What was driving that was consumers were having stimulus checks, and there was all sorts of sort of optimism for business reopenings coming out of the pandemic.
The vaccines came out, so things were
Yeah,
starting to be
vaccines.
normal.
Yeah, there
Hmm.
was there was optimism in the future components, and then in the personal finances current condition components, the fact that so many consumers had more income than they were used to and more savings than they were used to thanks to the stimulus checks. It was just a very positive combination that was buoying this recovery in sentiment. That was before inflation took off. As soon as inflation took off, things went downhill again, came to the historical low in mid 2022 when inflation was peaking. And since then, it was sort of a slow, painful, gradual, but relatively steady recovery. And I think it's important to point out that that recovery was pretty steady since inflation peaked. However, it did get a little bit of a boost in the level just in the past couple months, really around the election. And I know, Sophia, you've looked a lot at sort of the partisan dynamics and how that plays into sentiment. Do you want to explain a little how that plays into this?
Yeah, so we actually had a little chart or visual that kind of went somewhat viral in the Twitter world and the media landscape because just a couple days after the election, pretty much immediately after we knew who was taking over power for the presidential spot in the US, the index of consumer sentiment flipped for Democrats and Republicans. And something that's cool about Morning Consult data is that we collect it daily, as I mentioned earlier, so we can see those changes right away. But also because we collect such a large volume and sample size, we have a bunch of different demos that we can look at. One of those is Republicans and Democrats. So them swapping, it kind of took some people by surprise, and maybe it came off as a bit reactionary and a signal of hyperpartisanship in the world we live in now, which is kind of true. But at the same time, there are levels to it. First of all, this always happens. This is a historical relationship that people have done a lot of research on, and we see time after time when a new party comes into power, even before they come into power, just being elected into power, the index of consumer sentiment swaps for people based on the political parties. So now that a new party is coming into power, it basically switches who is more optimistic about the economy. Some of that's a little irrational because some of it we did have a little bit of a jump in current conditions, which doesn't really make sense because nothing changed from Tuesday to Thursday, the week of the elections. But the big chunk of that actually came from future expectations. So, just as a reminder for people who maybe don't remember or aren't as familiar with the index of consumer sentiment, it's made up of 5 parts, 5 separate indexes to make one aggregate index. And three of those five are actually based on future expectations for business conditions and personal finances. And then we have also one current conditions for buying conditions. So I'll put up a little graphic here if you want to look at it. We have a lot of resources online as well, but it kind of makes sense a little bit more when you think that 60% of the index is based on future conditions for someone to feel more optimistic about the state of the economy when their party is now going to be in power in the future. So that's it makes it seem a little bit more rational. That being said, it does seem like maybe there is more partisanship now today than before. And something that I thought was interesting was that Republicans' consumer sentiment went up actually more than Democrats went down, at least in the immediately. Overall, part of the reason why it's gone up so much, reaching almost that 2021 high that you mentioned, is because Republicans are so much more enthusiastic about the economy than they were a few weeks ago. But also, current conditions have gotten better overall, as you mentioned. So, when inflation eases, people are starting to feel a little bit of relief, and we see this labor market continue to be strong. So people have the money to deal with rising costs and whatnot.
Yeah. And what's also interesting about that current conditions component, specifically the one about personal finances, we did find that of the five components, that one has tended to have a little bit more of a strong correlation with spending habits compared to future expectations and things like that, which makes sense. Um, so what was interesting to me was that that one, as Sophia mentioned, it wasn't as reactionary to sort of the partisan swap from the election. It didn't have a huge shift, especially compared to the ones projecting out into the future. But since the election, it has actually continued to rise pretty strongly. So it's not only a partisan shift that's driving this increase in sentiment. That's a component of it. But interestingly, there are some more I don't want to say rational components, but maybe components that are tied to the economic reality that are also showing some positive signs.
Yeah, and this is actually something that we have talked about in our extensive research on why do people feel so unhappy about the economy when the economy is doing pretty well. A lot of our conclusions were we just need time to let it cook. Like, we need time to let people take in the fact that prices aren't growing as fast because they were just growing so fast, and the price level is still much higher than it was before. And people are mentally thinking about 2019 as a benchmark for prices. But as we get farther away from 2019, it's not as salient in people's minds in terms of what things should cost or how the economy looks. Okay, well, that's our U.S. consumer sentiment, but as I mentioned earlier, we have consumer sentiment across the whole globe, 40 plus countries, and we're gonna bring on the head of economic analysis, Denny, to come talk about that. So we will touch back in with you in a few seconds. Hello, we're back, and we're here with Denny, our leader of economic analysis. How are you doing, Denny?
I'm doing well, thank you. How are you
We're
guys doing?
we're great. We're so happy to have you on. We're going to get into the global ICS. So, just as a reminder to everybody, we talked about the US index of consumer sentiment and how it's been increasing over the past year, even more than a year, since inflation has been easing, basically. But that's not been just the case for the US. Actually, most of the countries we track have had improving index of consumer sentiment over the past year. And Denny came out with a memo last week when this comes out, that goes over the biggest winners and losers and talks about just how most countries overall have seen increasing consumer sentiment in 2024. So, Denny, do you want to give us a brief overview of what the trends were in 2024 globally?
Sure, absolutely. So I guess as a reminder, we asked the same set of questions for the Index of Consumer Sentiment in 43 countries. Why this is important from our perspective is that we are able to do a bit more comparison as opposed to looking at countries that are asking different questions and at different times. For our index of consumer sentiment, as you have discussed, we take the University of Michigan survey questions and we ask it in 43 countries. It allows us to do more of an apples to apples comparison. Obviously, the index levels as we compose them are usually at different levels, but the changes, which is what's important for us to analyze how the consumers are feeling in those respective countries, we can do more of an apples to apples comparison on those month over month and year over year changes. So for our analysis at the beginning of the year, I took a look back at what happened in 2024, and I looked at who were the winners as opposed to who were the losers for index of consumer sentiment. Our index of consumer sentiment is daily, which allows us to do a lot of in-depth analysis because it has a very large sample size. But for this analysis, I looked at monthly averages and I looked at what that average was at the beginning of the year in January 2024 and what that average was at the end of the year in December 2024. And I've just plotted that change for all the 43 countries that we survey. And what you've said is very much true, Sophia. Across the globe, we definitely have seen a majority of the countries an improvement in index of consumer sentiment that is in line with the broad trends that we have seen globally as well, with a lower inflation rate coming in after that, peak inflation that we have seen in the previous years. That being said, we of course had, winners and losers, and I've sort of bucketed them into three. Generally, I would say that winners had gained more traction last year as opposed to losers. Um, what I mean by that is that when we look at the index score changes, the winners' index point changes were larger compared to the losers' index point changes, which is good news. Not only we've had more of the countries recovering in their consumer sentiment, but that recovery scale was higher for the countries that we've looked at.
It's good news because, yeah, overall people are doing better, but not only that, but the winners are winning more than the losers are losing. So that's good news. I like to start here with bad news first. So because, we always want to end on a good note. So, who were the biggest losers in 2024, or who is the biggest loser, and what's going on in their country that might be putting a damper on their consumer sentiment?
So that is usually my approach too. I start with the bad news, and for the bad news, we're going to look at the number one loser being Brazil. Um, so I'm just going to go back and remind folks that this was a monthly average, but um, really a lot of the movement that happened that was very sharp was at the end of the year for Brazil. So had Brazil not had the troubles at the end of the year that it had, I don't think it would have been the biggest loser. It started the year with its index of consumer sentiment dropping, it stabilized it a little bit, and it's really at the end of the year where we've seen it being carried on to be the biggest losers. Um, and the driver for that is essentially, the fiscal policy suggestions, and investors, and all of a sudden leaving Brazil, Brazilian real depreciating, and in response, the Brazilian central bank hiking interest rates by 100 basis points. All of these economic factors and decisions drive down the consumer sentiment, and we could see that pretty much in real time in our index of consumer sentiment, again, which was daily. But when you accumulate all of that, we have a pretty significant drop at the end of the year that carried Brazil to be more of the biggest loser among others. Again, that loss was compared to January 11 points. When you look at the other end of the coin, the biggest winner, Argentina, its index points increased 25 basis points. So relatively speaking, it's not as big of a loss as the gain that Argentina had.
Yeah, and before we get into Argentina, I know that also our colleagues over on the global political side at Morning Consult are going to talk or have talked about Nigeria, who was the second biggest loser. Do you want to go into that a little bit? What's going on that makes them different than Brazil and that makes them the second biggest loser?
Yeah, so I think this is also the really nice aspect of the index of consumer sentiment being pretty much all on all the time, is that we can see those changes over time throughout the year. And as economists, we like to give some alphabet names to the economic recoveries or lack thereof. The V shape, the U shape, the K shape, whichever shape anyone likes to go with. When I was
We
looking at
do
the
love
chart
the
for Nigeria.
letters.
Yes, we do. When I was looking at Nigeria, I saw two letters, which is, surprising. Typically, when we look at the path taken, there's either a consistent volatility or lack thereof for these countries. But Nigeria had a pretty volatile year. A lot of this can be tied to the depreciation of its currency and the inflation that the country has been facing. The currency was floated in 2023, and we do see another um, good chunk of depreciation at the beginning of the year in 2024. And just in line with that, we definitely see that drop in index of consumer sentiment. As the currency stabilizes, we do see ICS improving, and then once again, tied to the inflation rates increasing and the currency depreciating, we do see that ICS dropping again. For a country that does import a good majority of goods, that currency, that exchange rate is quite important. When I say at the end of the year, we do see a bit of an uptick in ICS, and that is coming at the same time as the currency appreciates a little bit. That certainly helped the sentiment in the country. That being said, where they started versus where they've ended, there's still a pretty big gap. But for us, it was important to follow that different shapes taking hold in their consumer sentiment throughout the year.
So you've coined a new term, syllable-shaped recoveries
Yes.
Yeah.
with multiple letters.
Multiple letter country.
Should we hear about the winners now? The good news?
Yes, we can pivot to some of the good news now, and that is going to be Argentina. As I've mentioned, Argentina's index improved around 25 points compared to January when we look at the end of the year. That's a pretty big increase, and frankly, at the beginning of the year, if you ask folks, would we see this sort of increase? I think the answer would be no. It has been a bit surprising. Argentina had a new leader at the beginning of the year who came in, proposing and establishing some pretty significant austerity measures. This country had a very high inflation rate at its peak. It's almost close to 300% year over year in the middle of
Yeah.
the year.
For context,
Um,
ours was when it was high was around 9% at the highest. So yours,
exactly.
yeah, not even close to 300%.
Yeah, I don't
Exactly.
think I would have guessed at that point in the year that Argentina would ever be the the biggest winner. Anyway, go
Ex-
on, tell the rest of the story.
Exactly. So, with all these austerity measures coming in, inflation at this very high level, a lot of the government support that has been given to the consumers taken away, one would expect that the ICS would actually drop. But the Argentinian leader has been very popular and has promised to bring in change. And I would say some of that change has definitely come. But on the path to that change, we've definitely seen the austerity measures affecting, for example, the poverty rate in Argentina, which has increased significantly. So, despite these austerity measures, though, we definitely see an upward trend in the ICS. And if you sort of look back, a lot of the ICS is forward looking. Perhaps this is driven by the fact that Argentinians believe that after these austerity measures take hold, perhaps their economy will be in better shape.
Mhm. Yeah, we actually talked before you came on about the future part of ICS and how that has such a big sway. It's actually three out of the five indexes that compose it. And so that was, as we discussed earlier, was affecting the increase in US ICS after the election. But we saw this same effect when Milei took over in Argentina. Um, Immediately, their ICS went up due to future expectations when he was elected. But as you said, it's continued to go up not just because of future. I think it's mostly future, but he's giving them hope for the future as he implements his austerity measures, and it does bring down inflation, but it's also current conditions as well.
Exactly. And if we pivot, I think you definitely see a bit of a dip in the ICS in late summer, early fall. And that's really, I think, when Argentinians realize these austerity measures are biting. Again, I mentioned the poverty rate increasing. And of course, at this point, inflation is coming down, but it's coming down from a very high level. So it's only in the third quarter when Argentina leaves behind recession, right? And inflation pretty much comes down, I would say, significantly, then you definitely see another uptick in ICS. So the real-time measures then begin to support the ICS increase as opposed to sort of the futuristic look at the beginning of the year. It's not as clear of a V-shaped recovery that we've seen in Nigeria. I would just generally say that it's been an upward trend in Argentina for 2024. And it's not that their troubles are behind. They still have a lot to recover. That being said, I think that has been the biggest surprise. If we look at sort of a comparison across the 43 countries, a country that has had such high inflation, such big austerity measures, still having an index of consumer sentiment that has increased significantly last year.
Especially because, austerity measures don't come without pain, but, you do what you need to do to bring down your inflation from nearly 200 to 300% year over year. So it will be interesting to see how it changes next year. I wonder if maybe those austerity measures might bring some people down to earth a little bit as they hit home. But as you mentioned, the recession fears are kind of subdued now. They had a pretty good end of the year. So maybe it will keep climbing, and it's definitely an interesting case study for us economists to see how things evolve over there in Argentina.
Absolutely.
Okay, well, Kayla, do you have anything to add, or are we wrapping up here?
I think it was so much fun having Denny on, and it was nice to bring a little bit more of a global flair to our podcast to start the year. So, no, I don't have much more to add. There's plenty more to talk about, but I think we'll save that for future episodes.
Yeah, I guess now would be a great time to plug our Global Consumer Confidence Tracker page. So, Denny, does that update monthly?
Yes, currently it updates monthly. It has daily data. And if you click on some of the countries that you don't want to view, it's grouped in regions. You can actually have more of a granular look at the specific country that you're interested in.
Okay, yeah. So you can view all those countries. If there's other countries that we didn't mention here that you're interested in, definitely go check it out because it's really interesting. And that apples to apples comparison is also super helpful and unique, which adds a lot to the picture. Well, thank you, Denny. This was so helpful. I really
Thank you.
appreciated your expert international opinion, and I'm sure we'll have you on again later this year. So thanks everyone for joining.
Thank you.
Bye.
Thanks.